Yesterday in a note that the Santa Claus rally has begun right on cue. So you think we're going to have a nice little ramp between now and the end of the year? That's intact?
Yes, yeah, I think Fed chairman's comments yesterday really sort of underscored that. There's a lot of reasons for risk on to happen, including, momentum, the seasonals. I also think COVID in a way is also stabilizing with the vaccine. So a lot of reasons to expect at least 3,800, probably higher before year end.
Okay, so that's at least 2% or so of where we are from now. Let's look ahead, if we could, because you have a very interesting perspective on 2021, almost a tale of 2 years, right? You have a first half scenario and then a second half. In the first half, which I find really interesting, you say, even though you're so optimistic, that stocks are going to have a 10% correction sometime in the first part of the year, maybe February to April. Why?
The market's got a pretty big overbought condition to work off. I don't think it's going to be an issue into year end, and I don't think it's really an issue in January. And I'm not necessarily worried about all the good things that could happen next year. But given the overbought situation, and if you look at other bull markets, usually by that 12th month, you have a pretty angry and painful correction. So we think that starts in February to April, and that would take us to 3,500. I would be buying that pullback, but I do want people to understand it's going to make 2021 feel really difficult.
Yeah, but you have one heck of a backloaded jump coming next year. If you're right, you say the S&P should rally 25% in the second half of 2021 to 4,300. That is pretty optimistic. A boom, some would say.
Yeah. First of all, I think an economic boom should follow. If anyone's looking at China, that's a template. I mean, China is going absolute gangbusters, and we know there's a lot of pent up demand. And on top of that, I think we're going to be looking at two conditions that really add hugely to risk on or equity risk premium falling. One is the volatility should be dropping. We averaged the third highest level of VIX in the history of the VIX in 2020. Every time you've had that elevated VIX, it drops pretty steadily over the next 3 years. I mean, I think we're talking sub 15 VIX within 2 years. And the second is negative real rates are going to be minus 6% next year. That's a real incentive to be acquiring real assets. And that's historically been very good for cyclical stocks. So I think that triple combination takes us to at least 4,300 on the S&P, wow. Probably higher.
All right, we'll get back to where you think we should play this and how. Let's bring in the committee, though. Farmer Jim, I'm bringing you in first, okay? Because you've been, of late, one of the more bullish committee members that we've had. Yet you're only looking for a 6% return next year, Jim, which frankly surprises me.
Well, let me explain it, because I am far more bullish than a 6% return. That return is a price return projection on the S&P 500. You can add a couple of percentage points in dividend to get to 8%. But Scott, I know I don't need to tell you, you'll tell me. I have a strong value tilt. And what Tom Lee was just saying is what I believe. I think that you're going to see the classic early stage of an economic expansion that favors cyclical stocks. I think that the rotation you've seen over the last 3 months is for real. There's been some discussion about financials, just as an example of value stocks. And how can they possibly do well in the current environment? You have to remember the stock market looks forward a good 6 months. And what it sees is loan losses that are a heck of a lot lower than what's been reserved, possibly higher interest rates. But also the Fed probably 6 months from now is going to greenlight share buybacks. This is just one aspect of the value trade. So the S&P 500 may be up about 8% in total return next year, and you may say that's tepid. But for me as a stock picker, I'm really looking forward to a return that's much better than the S&P 500, not just because of the value overweight, but because I also agree with Tom that you are going to get a correction. I happen to think it's in January, just using historical precedent. But that's something that I'm going to try to trade around. Hopefully I get that right. I could have a nice low teens year next year, and if that happened, that would be a great year.